Today, for the enrolled agent exam, we're covering the heart of any sole proprietorship tax return: common deductible expenses on Schedule C. To be deductible, a business expense must be both ordinary and necessary. An ordinary expense is one that's common and accepted in your specific trade or business. A necessary expense is one that is helpful and appropriate for the business. It doesn't have to be indispensable. The exam will test this concept by giving you a scenario with an expense that feels borderline. For example, a landscaper's fuel costs are clearly ordinary and necessary. But what if a self-employed accountant pays for a subscription to a high-end graphic design software suite? This might be questioned. The key is whether the expense is helpful and appropriate for that business, not whether it's essential. A major exam trap is the distinction between wages and payments to the sole proprietor. Wages paid to bona fide employees are deductible on line 26 of Schedule C. This includes salaries, bonuses, and commissions. However, a sole proprietor cannot deduct wages paid to themselves. Their compensation is the net profit of the business, which is not a deductible expense. Expect a question where a sole proprietor includes a salary for themselves in their wage expense calculation. You must know to exclude it. Another tricky area is contract labor, reported on line 11. These are payments to independent contractors for whom you would issue a Form 1099 NEC if you paid them $600 or more. The exam will test your ability to differentiate between an employee and a contractor. Remember, the key factor is control. If the business owner controls what work is done and how it is done, the person is likely an employee, not a contractor. Deducting insurance is another key area. Premiums for business-specific policies like general liability or malpractice insurance are fully deductible. Health insurance premiums for the self-employed individual, however, are not deducted on Schedule C. Instead, they are taken as an adjustment to income on Schedule 1 of Form 1040. This is a classic point of confusion the exam loves to exploit. Business interest expense is deductible, but with limitations. For larger businesses, the deduction is generally limited to 30% of adjusted taxable income. However, a small business with average annual gross receipts below an inflation-adjusted threshold is typically exempt from this limitation. The exam might give you a scenario where a business owner uses a loan for both business and personal purposes. You must allocate the interest expense as only the business portion is deductible on Schedule C. The personal portion is generally not deductible. Finally, documentation is critical. While you don't submit receipts with the return, the taxpayer must have records to substantiate all claimed expenses. For travel, meals, and auto expenses, the substantiation requirements are even stricter, often requiring logs. A common exam question will describe a scenario where a taxpayer has expenses but lacks adequate records. In such cases, the deduction would be disallowed upon audit. The personal use portion of any expense, like a vehicle used for both business and commuting, is never deductible. A simple mental shortcut to remember the core principle is: ordinary is common, necessary is helpful. If an expense is common in the industry and helpful for making a profit, it's likely deductible, provided you have the records to prove it. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.